Hey guys and dolls, welcome to this week's episode of the B.Invested Birchy podcast. I'm your host, Nathan Birch. It's the show unraveling the truth to the facade of the 21st century. We're next, the Matrix and waking up to motherfucking reality. Today, we are going to be talking about buyer's agents, buyer's agencies galore. They're out there on your reels. They're out there every time you turn your social media on. Buyer's agent, buyer's agent, buyer's agent, be a buyer's agent, all those sorts of things. I want to hone into specifically one part about this industry because 16 years ago, 17 years ago, there was no such thing as buyer's agents. I'd tell people, hey, B.Invested, we're a buyer's agent. People would be like, what's a buyer's agent? I'd have to explain to them, we buy properties, we get them below market value, etc. And they're like, I have to pay you to buy a property. And it's kind of funny, right, to see this industry explode. But with that comes a lot of, unregulated and, fun and interesting characters that you see out there. So just understanding and realizing that most buyer's agents out there have not been a buyer's agent for more than 5 years because this industry didn't really exist before 5, 6, 7 years ago when the big masses came through. And with that comes, interesting things. And instead of 16, 17 years ago, people going, what's a buyer's agent? People are like, oh, you're a buyer's agent. What are your fees? And ask them questions. Everyone's very familiar with what a buyer's agent is today, or most people are. But I see a lot of people when they come in there asking, like, what AI data-driven analysis tools do you use in order to be able to suss out the next big hotspot? And I've actually spent a lot of time researching this, right? And it is a scam, right? It is a scam. If you've invested in the crypto, you see those crypto pump and dump Ponzi group scams that are out there, right? It's literally happening in the property market. And I take great privilege and little laughter internally. I talk about it with my investors. The first time I'm really making a video of this or talking about it openly, but I take great pride in this because in the B.Invested office, we're laughing because we create these trends, right? It's literally hilarious, right? So with it, why am I saying that AI-driven data back, AI data-driven search functions is a scam, right? I'm not an AI guy, so just throwing it out there from the start. You probably tell from this, right? But I know data when I see data. I know data, how it can be used in a good way. I know how it can be manipulated to shit. And I've seen all this AI data stuff. It's been manipulated, folks. So looking at it, it's really fun. And I want to take the deep dive into it. But probably the first time I realized when data can be manipulated was I was buying a bank repossession deal in a Central Coast, New South Wales suburb called the Entrance North. Postcode is 2261. And I don't have all the stats in front of me, right? But let's just go for a little trip down memory lane. So this thing, the Entrance North has a few thousand residents in it. It's a part of the Central Coast, New South Wales. There's a big suburb called the Entrance, which has got shops and got lots of units and lots of high-rise units and whatnot. But this little town, when you go over the bridge called the Entrance North, only has, a few blocks of units. Well, it did until 2005 or 2006 or whatever, right? And the stats showed that like these little red brick units that were there were selling for like $200,000 a piece. And then there was a block of unit which got built in this town, which had 120 odd units in Hutton Road, the Entrance, 54 Hutton Road. And this block of unit got planted there, and they all sold for like $600,000, $700,000, $800,000. So instantly, when you look at RP data and all those sorts of data, right? And data, typically when you might call it colality or core logic or whatever. RP data is what it was called back in the day. I still call it RP data. A lot of people still refer to it as that. And anyway, RP data was showing that, the town had $200,000 average medium unit price. And then within this last 12 months, it's gone up to $600,000. So it's had a 200% growth in value in 2006-7 to about 2009. It had doubled, right? And that just simply occurred because you'd have, 200 units in the area, but then you'd have 200, 120 more units that all sold. So like the spike of units are soaring, prices are soaring, everything's going up. It looked very good on paper and it looked very good on data. But once again, that data before it comes out is old because it's already happened. And then you don't know what's happened in the location because you're not, familiar with exactly what it is. So looking at the data that has occurred there, it's shown that the market doubled in a year, tripled in a year, and that there was a boom and a big surge of people. And then in about 2010 or 2011, I came in and bought for my investors a bulk deal. I think it's about 2010. I picked up about 30 units in that complex because the developer had gone bankrupt and it was a bank repo. And I was picking them up for 145 to 212,000 a piece. And I stole them. It was fantastic, right? And then 12 months later, you go and look at what's happening in the entrance north and it shows, well, the market's gone in half and it's crashed, right? And the reason being is that data is pulled from a very low pool of transactions that has occurred. And that showed it looked like it had boomed and looked like it had bust. So when you look at that data, that was my first experience with it 15, 16 years ago of how data can be manipulated. And I know how banks work, folks. I know how banks work, every bit of the bank, whichever bank it is, right? The big fours, that. I know the policies, the processes, and how they view what they do at the back end. And when I look at these valuations that happen out there, the banks will pull data and, you can have fun with that data as well, right? So when I look at the data that the banks would use, let's just assume you've got a housing commission house. If you look at that same example, you've got data of housing commission houses for 200 grand on this side of the street and brand new houses for 400,000 on this side of the street. And then when the data comes in, it's pulling sales from this side of the street, still got the same street. Data isn't physically boots on the ground, the person walking down the street going, oh yeah, that's because of that, that's because of that. It just pulls it in and it's like these houses are half burnt down. These ones are brand new, ready to go through that cycle. But, the data can't pick up that. So that was my first experience of it. And for the last, 16, 17 years, been here just buying properties that are in, below market value, really hardcore fundamental sort of investor stock, right? And I look for inconsistencies in markets. I look for glitches. I look for things where agents have priced things incorrectly. And I look for things that are below market value, that have below rebuild costs, that tick all the boxes for a good foundation property in the portfolio. And then I started buying, I've seen mining towns and stuff that I always advocated against buying in mining towns, which I saw these people come through back in 2007 to about 2014. And they were sort of pumping these mining towns. People used to come to me and say, oh, should I buy in Townsville? Should I buy in Gladstone? Should I buy in Perth, right? And I was like, no, like Gold Coast is better value than buying in Perth, right? For example, they go, oh, but Perth data shows, and this has happened throughout history, but it was very different before, and it wasn't these glossy names, right, of these data sort of things, right? People were being sold brochures and glossy material about, hey, this market's booming, we've got this mine happening, that mine happening, and people were paying like 500 grand, 800 grand for a little house of land, or it was like 15 years ago, for properties that were renting for $2,000 a week, and everyone got suckered into that. And then something fundamentally shifted or changed in that market. And then, those properties that were renting for $2,000 were only renting for 300 or 200, and there was a race to the bottom. People couldn't sell. They'll go and bank repo. Every second house was a bank repo. The banks didn't want to lend in those markets. There's lots of markets where banks won't lend. It might only be for a year or 2 years or 4 years. Did you know in Corona, at the start of Corona, that the Gold Coast they wouldn't lend on because it was deemed as more of a tourism area, and a lot of the properties in the Gold Coast for a period of 6 months there in early 2020 were unfinanceable. If you did finance, you had to put down. This is like CommBank were allowing people to buy, but that put down a 40% deposit and a 30% deposit just to buy a house or a unit, which is wild, right? But so these markets in mining towns went from you know, 800, 900 grand renting for $2,000 a week, down to 50 to 100 grand renting for $100 a week if they can get a tenant, right? And they're set vacant for a period of time. But that was because data was manipulated and those people got caught in a bubble, a Ponzi, right? But in around 2018, 2020, looking at where the commodity cycle was at and where things were at from a commodity front, I saw that, hey, this market had tapped out and, some poor bastard paid 800 grand for something. We'll go pick it up for $50,000. Doesn't matter if we're looking at coke coal or whether we're looking at, iron ore, coal seam gas. There was all different markets where there was a lot of value. So I started buying in some of these places, right? When I say that, right, I buy these properties, 90% of the stuff that I'm buying is in, capital cities, Sydney, Brisbane, Melbourne, Perth, wherever, right? But I started getting intrigued by these little areas, right, which had all the infrastructure in place. And I started picking up stuff and I was buying in Gladstone for 60 grand, right? And tell me, guys, in 2020, if you could buy it in Gladstone for 60 grand and hop in the DeLorean and go back where now you're paying 300 grand entry price for Gladstone, that's pretty fucking good buying because you've gone up by, 5 times in a period of 5 years. But when you're looking at buying into Gladstone now for $500,000, which a lot of people are, and there'll be a lot of people that are older, mature now, that have bought and done their ass in that market and be like, yeah, I know exactly what Nathan's talking about because there's so many people that have lost money over the decades that have gone by. And I look at spending 500 grand and I think, well, I could buy in a capital city. I can buy in Sydney I can buy in Sydney Harbour. We just did a deal in Sydney Harbour for like $700,000, right? And I mean like a brand new property overlooking Sydney Harbour. But, why would you go and spend in a mining town or in Gladstone or Townsville at that? And that's not to say there's not value there, right? But my point being is what has happened and what caused this new boom. And I went into these markets and picked up a lot of stock, right? I buy a lot for myself and for my investors. And I noticed that all these data-driven AI guru buyers agents out there are coming in. And it's like exactly where I've been to, right? We've bought hundreds, thousands of properties in a location. And then next minute, the data is coming through their system and they're being generated saying, boo, boo, great buying. This thing here's starting to take off. It's been in the bell curve, whatever, right? And I'm seeing literally wherever I go, there's nothing happen, right? And then all of a sudden, all this data is following, right? So I've just find it amazing. And I tested it, right? I dropped little weird things out there. And some of these locations are the most obscure locations in the country, right? Whether it be Blackwater, Emerald, right? Chinchilla, Miles, Wendowen, right? I'll tell you a story about Wendowen. This little town of nothing, right? Out in the 5 hours from Brisbane or whatever, out in the sticks. It was a point where one of these buyers agents out there was in the media, right? And I know the sales data because there's only a few sales that ever happen in there. I got an opportunity to pick up units for like 90 grand a piece, right? I'm talking like 5-year-old things that's selling for 400 grand. I picked up for 80, 90, 100 grand a piece. So that's pretty good value out there, right? And then next minute, I saw in the news, one of these, they're on everyone's Instagram reels, right? The buyers agents, they're talking about Wendowen as going to be the hotspot. It's been identified as the growth corridor. I'm like, how the fuck can you have a growth corridor of 500 or 1,000 people, right? I'm like, hang on a second. These guys are pulling that data from these most obscure locations, but what's causing it to go off, right? And is it based on fundamentals or is it based on prognostication and hopes and thoughts and dreams of a data line occurring and continuing to go up? Because that's where fools get suckered into in any market. You have markets which start to take off. You see things of real value. And as a human, humans are flawed. Data, yes, I get. AI has great potential and good upside for things. But humans have lots of flaws. But what humans do get to see is what the data can't see, and that's the fundamentals of a news article. It's just using bits of information to generate a potential pool of something that may or may not happen. And I see it very familiar, very, very, very clearly out there. So when I look at these Ponzi schemes that are occurring in certain markets. I was buying heaps in Townsville for 100 grand. I looked at someone's file the other day, and I was looking at the properties, and I seen that I bought in Townsville for $80,000 for this person. I was like, shit, it's pretty good in 2020, right? Go find me anything, even a studio unit for under 300 grand a day, right? They're not out there. And, so it's good growth that's occurred. But then I was like, where's good value, right? When I'm looking at value, people say to me, Nathan, I don't understand why you've talked about mining towns being bad, but now you're buying a lot in there. I was like, well, I didn't see value there before because the value wasn't there. But I still didn't buy in Perth, right? But in 2020, I started buying in Perth because the Gold Coast was starting to take off and get too hot. 2019, 2020, I saw that the market had hit a bottom. And I was like, hey, idiots had come here, paid 500 grand for something I pick up for 200 grand. I may as well be picking up for 200 grand because this market has migration. And I'll get onto migration again in a moment, right? Because I just use mining as an example, right? But migration, we're in a world now where AI can't really pick up this data. I don't believe it can. But when I look at, let's say that someone's migrating, right? There's lots of migrants coming into the country. If you have been a doctor, right? You've come from India and you're a doctor and you've gone to uni for 5 years, 6 years, whatever it takes to become a doctor. You're like, I've got all the patches and, mum and dad are proud. I'm going to go to Australia, become a doctor in Australia. You get to Australia says, no, we don't recognize you as a doctor. Go back to uni, right? However, there is a path where you can get recognition for your achievements and your accolades, right? But you have to meet certain requirements. And those requirements is that you may have to go and live in a specific regional area for a period of 5 or 10 years. And this has changed, right? Like this has changed from like Sydney to Gold Coast to Perth to all these, right? So I look at that data, right? And that data has no record before that date they change policy, right? The policy doesn't overflow with what's happening, right? It creates a new trajectory and a new stream of whatnot. So I'd seen that migration policy to certain locations, and it changes every 3 months, 6 months. There's these new areas that have opened up, these ones here that are no longer classed as a regional hub. And I saw this back in the 2019, before Corona came out. I saw that, that the Gold Coast and Brisbane and Perth had become migrant hubs for fast-tracking skilled workers. So I looked at Perth and I was like, this data that I saw with my own eyes based on overlaying information will change the trajectory of a market. Let's go and invest in there. I was picking up units in Perth CBD for like 120 grand, now worth like 500 grand. And the rents were only like $200 a week. So it looked terrible. It looked like 10 years of pain, right? But the data trajectory would show that that's a bad investment before. But once you go in there and see it all, it's like, okay, let's start buying there. And then suddenly all these people are packing in behind it, right? So, I just find it very interesting, right? Whether it be migration, whether it be mining, whether it be whatever, you need to be buying on fundamentals, right? And today, we buy a lot in Melbourne, for example. And Melbourne's an area where I never touched beforehand. People used to say to me, buy in Melbourne in 2016. And I was like, 2016, I'm like, Melbourne is overcooked. And I just didn't like what the value was there and the proposition. And I never bought. And I was buying a lot in Southeast Queensland at the time. Today, I think Southeast Queensland is overcooked. And Melbourne got demolished in the last few years, right? Policy changes, government, people just not wanting to be under that regime or whatever. But how do they fix it? They bring migrants in, right? And Melbourne's got the fastest growing economy at the moment. And population, should I say, not economy, population. But when I look at that, I'm like, hey, hang on a second. This data of adding so many people into stock, you've got supply and demand issues that are blowing up. It's inevitable that's very, very good hot buying. And I look at it's not just a state, or it's like, down to neighborhoods, right? I've played this in the most smallest pools of data, and I'm seeing these podcasts with people coming out going, our data fundamentals of buying things that are fantastic. It's showing that this area is becoming a hotspot. And I did an event in June 2024, and I remember Tom Panos came up to speak, and he was talking about, the two markets that were very bad looking on charts, pulling them apart. It was showing at the time was that Darwin was terrible, and Melbourne was terrible, and it was. And I remember laughing because I just bought hundreds, I mean, like 500 or 1,000 properties in Darwin, and the velocity of stock that we were picking up versus the amount of stock coming into the market was not matching. And I laughed to one of my team members, and I was like, let's see what the data looks like in 6 months' time from now, or even 3 months' time. And that was a very pivotal point. It was only 12 months ago, that and I was like, let's look what this data does. And everyone now is going, Darwin, 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 great, let's buy in Darwin. It's talked about, there are all these buyers agents talking about data and whatnot. And what's causing that data to occur is, you just got to change one part of that data and it changes. I was buying it on fundamentals. I was buying properties in Darwin for 150 grand and 200 grand, and the market's now at 300, 350, 400. And that was a capital city of extreme value at $200,000, $300,000. But when you're looking at supply, you're looking at demand, you're looking at population, you're looking at certain pinpoints, that why did it trigger? Why did it just go off over that, right? And I think it's, as was my interpretation of where that data is being pulled from, is being pulled. And I notice when, certain changes happen in certain markets, which are not, anything specific, the markets tap out, right? This has happened through Mackay, Gladstone, Cairns, Townsville, right? It's like it follows, right? And it's like, what's happening there in the background? So I love AI data-driven data, right? Because it's, the way I see it is that lots of people are winning, right? I love it specifically for myself and my investors because we're getting in there and the data is doing its thing, right? And it's like it's coming down behind us and pushing it up, right? But the data input at the start was making that decision. The data that's being used is just, uneducated, just pushing buttons and letting something do the task for us, right? How many people today know how to drive a manual car? Right? Things have become easy. Things have become lazy, right? Is there a skill to driving a manual car versus the car? In 10 years' time, it'll be you driving a computer around, not a vehicle, right? And even driving automatic would be different than driving a self-driving car. So I look at it, is it bumper bowls for property investors out there, right? Is it bumper bowls? They just bang on the sides and hopefully something, they're going to knock a pin over. But I find it amusing. I find it exciting. Because there's a lot of people out there. There's thousands of buyer's agents nowadays, tens of thousands of buyer's agents. Fantastic ones out there, tremendous ones, right? There's a lot that never done anything, don't own anything, wouldn't know the first thing about investing, but they're out there giving advice, and they're in your reel. Probably after watching this, I'll probably get an ad for one. Say, hey, I'm a great buyer's agent, use me, right? But what are they using? What is their data? What is their methodology? What is the reasoning for them making decisions? What is the track record? What is the ability for those properties to perform? What is the fallout from 5 years' time of losses that occur because of, the data isn't there to show you, okay, I know I'll invest in a market. I invest in every market in the country, just letting you guys know, right? I buy in Vaucluse in Sydney, Mount Druitt in Sydney. I buy all the way over to Perth. I buy up in the top corners of the tropics. I know from doing this for 17 years and being an investor for 22 years, I know the bank's lending policies. I know the environment. I know cycles of different things that occur. Just for example, right? Let's go to the far north Queensland, right? There's a wet season. Did you know that there's a wet season that occurs and that affects trade, it affects business, it affects commerce, it affects people, it affects... If I was a tenant wanting to rent a property in far north Queensland, I would be trying to get a property somewhere around January of that, right? Because it's a wet season and a lot of people for work disappear. So then the data shows that the vacancy periods that are around that period of time, I'd be wanting to try and lock in a lease in the wet season because you get a better deal, you get better options, whatnot, right? But a lot of people don't understand what's happening physically in markets. They're just going, oh, the data tells me it's good, right? Okay, so let's say everyone pulls out of that market. What's going to happen once the party stopped and there's not enough activity and the people are like, shit, I'm at the top, let's sell, then it becomes a crash again, right? So there's a wave up, but what about the wave back down or the wave out of a market? I do believe today, looking at certain policies, government policies, will change the way that boom and bust cycles have occurred in the country in years gone by, but time will tell and common sense will prevail. But I look at all that data and it's like, well, if I'm looking at Townsville now for 350, 400 grand for a 2-bedroom house commission, the highest crime rates in Australia, right? Some of them are in Townsville, for example, right? But when I look at a property at 150, 200 grand, fantastic value there. But when I'm looking at $400,000, I'm like, shit, I can buy in a capital city for that. I ain't seeing the value. And I'm saying the same thing in 2025 as what I was saying back in 2010 and 2015 about those markets, because the value, is being diluted and removed from that market. So, on that front, guys, I just thought I'd share my thoughts on that. Is it good? Is it bad? I love it, right? Personally, hand on my chest, I love it. I don't use it. I have no intention of using it. I think the suckers will get stuck in that. But I love it for me because I'm there before the data makes its trajectory and makes its move. So, I'd be using the noggin to make decisions, not letting some algorithm that's pulling expired data or data that's inconsistent or a very small pool of data to make a decision, especially spending $250,000, $500,000, millions of dollars, tens of millions of dollars in building out a portfolio because of the fundamentals right there. And the fundamentals going to perform year after year, day after day, week after week, decade after decade, because, what's the portfolio going to look like in 10 years' time? What do you need it to look like in 10 years' time? How do the properties perform over 10 years' time? I'm looking at data. I'm seeing people, this is my final note, using this data. I'm seeing the buyer's agents putting out properties, right? And it's my investors selling properties that were bought a decade ago or 5 years ago that are offloading to that market, right? They're literally gobbling up the stock going, oh yeah, it's fantastic, right? And that stock is not the stock that you'd be taking into this next market cycle, but the data shows it is, so they all are doing it. So on that note, folks, I'll leave it with you. Thanks a lot for tuning in. It's been fun sharing that. Hopefully it was insightful. Hopefully it was a bit of a different perspective on the data-driven AI buyers agents that are out there. Whenever I see it, I think, cringe, right? Like, why would you need data and AI driven, right? It's crazy. But if you want help building a large portfolio, everyone's out there spruiking, you'll buy properties and get properties, and my property's the best, and this property's the best, and it's best because we're the best buyer's agent, we're the best investment company, whatever. You need a strategy. That's what makes the difference between people that get 1, 2, or 3 properties and the ones that get 10, 20, 30, 40 properties in their portfolio. Is the strategy, is acquisition, it is the frequency of what you need to do, it is the structuring of the finances, the structuring of the portfolio that makes the difference between you getting 1 or 2 or 10 or 20. If you want a strategy, you want to build out a portfolio, hit us up, 1300-367-925, email us, admin@B.Invested.com.au, and remember to like, share, and subscribe every Thursday, Google Play, Apple Play, Spotify, and YouTube. Bye for now.
Like Bilal said, man, we stuck in the matrix. This my advice, don't care if you take it.